Credit card and personal loan delinquency rates are on the rise. Should you be concerned? What does this mean for you? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The consumer is 70% of the overall economy. That's why we care so much on, hey, is the consumer healthy and are you and I healthy, right? That sort of thing. But generally, from an economic standpoint, how's the consumer doing? Do they have excess income? Are they, have they taken on more debt? Those sorts of things, because that gives us a clue as to what spending habits may be, and that spending habits, that is what will drive consumer revenue, company revenue, corporate profits, and that drives Wall Street, okay? And because Wall Street, the stock market, is a leading indicator, the stock market is very sensitive to clues on how the consumer is doing, okay? That makes sense. And ultimately, we're gonna talk about this stuff because that matters at what's called the macro level, the high level, but ultimately, you only have direct control or significant influence over one consumer, and that's you. That's you. It's not even your kids. That's you. And so we'll take kind of what's going on at the macro level and then apply it to you and me personally. So yeah, not great news. Report came out recently that said loan delinquency rate, so credit cards, personal loans, has increased 0.6%. Now, that's a lot. That's a lot. These are people that have a loan payment to make, but they're more than 30 days past due. And so is this alarming? Is this at like sort of pandemic levels? No, this is approaching pre-pandemic levels. Okay, so that's good. Does that mean, well, then, this is all smoke, no fire? Well, listen, during COVID, during the pandemic, lots of money was kicked out to people, and we had this enormous net savings rate, enormous, where you couldn't go out and do anything. There was stimulus, there was other monies coming in, and therefore, on a net level, on average, a lot of people had a lot more money that they had at their disposal than they were able to spend. And lots of folks, with that number has now gone negative, and people are spending through that pandemic level savings. And a lot of bank CEOs and financial folks, economists, are saying that that's probably going to be all spent through by this fall, and people will need to be back to pre-pandemic levels. Here's the concern. Not only has the delinquency rate gone up, but the overall credit card balance, I've shared with you, we are at record highs. We are approaching $1 trillion. In fact, quarter on quarter, it was pretty similar. I sort of expected us to get above that $1 trillion mark in total credit cards. And if that's not enough, record high levels, we also have record high interest rates on credit cards. And you might say, no, we've had interest rates that were much higher. I know interest rates for lots of different loans, right? Mortgages and so on. But for credit cards, we're at record levels. So record high balances, record high interest rates, that spells trouble for the American consumer. So all in all, while this isn't alarming, this is threatening, and we should be aware of it. The other thing that you need to be aware of is, guys, we haven't even started student loan repayments yet. And I know we're still, unsure exactly how that's going to play out, but there haven't been student loan payments in, what is it now, 3 years? And so imagine when that starts. Even if it's a different level, imagine when that starts and how quickly things could turn if, well, we've got a few people that are starting to be behind on their loan payments, and now you add student loan payments back onto people's budget, could be a significant challenge. All right, so what does this all mean to you? Number one, the first personal takeaway. I have no idea if you struggle with this, or if you're looking at this saying, yeah, I'm sort of feeling the pressure myself, or if you say, I'm not feeling any pressure. I can't believe, people are having this trouble. Make sure that you are using a 3 bank account system to manage your personal finances. So what I mean by that, that's not your overall financial plan. You've got 6 areas to your financial life, my financial life, everyone's financial life has 6 areas. Your present financial position is your day-to-day, week-to-week, month-to-month cash flow, as well as a balance sheet. Okay, so where do you stand at any given moment with your overall finances, and then how are you managing your cash? That 3 bank account system is how we would recommend, and everyone can custom fit it for their own situation, but that's how we would recommend that you manage your personal income, your personal cash flow. Bank account number one is your checking account. You've got money automatically going in, direct deposit every single week or every other week or however you get paid. And then you have eyes on, you have an awareness of all of your normal monthly bills. And you've made sure that, yep, I've got enough money coming in. It covers all my normal monthly bills and all the goals that I'm saving for. And I'm not, there's a gap, there's margin, right? There's excess so that if expenses come in a little bit higher or whatever, I've got margin there to manage it. That's bank account number one, fairly obvious. Bank account number three is the other obvious one by a lot of financial professionals. That's the emergency fund. That's the cash reserve. I like to say your financial confidence account, that you've got 3 to 6 months of your normal living expenses set aside in an FDIC insured, liquid, and yet high interest money market or savings account, okay? Something where you hope that you're not having to touch this money, this account really ever, right? And so while it's there, you wanna make sure it's earning a lot of interest. And so you've got your daily, weekly, monthly finances, cash flow. You've got money stashed aside for an emergency. So it's in between that second bank account. First is checking, third is emergency fund, money market. It's that second bank account that's the glue between the two. And that is all of the non-monthly expenses. All those expenses that you know you're gonna say yes to, or maybe you've already said yes to, but they don't come out, that the expense doesn't come out every single month. You can budget and plan for all the monthly stuff. Mortgage, Netflix, all that sort of stuff, no problem, okay? And you've got money set aside for emergencies. It's just, what about everything in between? If you don't have money saved up in advance, then it's gonna ruin your monthly cash flow, make you feel like you're always robbing Peter to pay Paul. Or if you say, nah, I don't like that game, then it's always gonna feel like an emergency, when deep down it's not an emergency. And it could erode that emergency fund, and then a true emergency comes up. So I'm talking about setting money aside for known upcoming expenses like a family vacation or birthdays or a home repair, car repair, deductibles, insurance expenses that, I pay my life insurance once a year as opposed to every single month. It's cheaper to do it that way. Those sorts of things, okay? Where you figured out what are all those known upcoming expenses, divided it by 12, and have it coming out of that monthly, budget where you're saving money aside into that bank account number two. So that's what I would encourage you. If this is a sign, the loan delinquencies are on the rise, are you managing? I would look at that to say, personally, for the only consumer that I can truly influence, am I managing my finances the way that I should to help ensure that I don't get into hot water or have some delinquencies either? 3 bank account system, that's what I'd recommend. Second thing that I would tell you to do is, if you do have credit cards or you're using credit card balances, make sure that you're using a debt snowball repayment system, working with your certified financial planner. How much can I pay every single month on all my credit cards, and therefore which ones do I pay the minimum amount on and which ones do I put all the extra on? That's a debt snowball payment system. Your CFP should be able to help you with that. But also, you want to be aware of what are my balances compared to what my overall credit limit is. Right now, we haven't seen credit card companies start reducing those overall credit limits. They normally do that during economic contractions or recessions. As we see delinquencies rise, we may see credit card companies start to ensure that they are not too exposed, and they might start lowering credit card limits. So therefore, working a debt snowball, but also making sure that you've got room, margin between where your limit is and where your balance is, that's critically important. Plus, the closer that your balance is to your limit, that starts harming your credit score even more. So making sure that you've got margin there, that's the second thing that I'd apply here. And then the third application here is where I started, and that is that the consumer is an integral, very, very critical piece of the overall economy. And if this is a sign that, well, the consumer is okay, but not as good as they were before, I wouldn't see this as an obvious, turmoil in the stock market and the economy, but I would start bracing yourself for that. So making sure that you're taking the right level of risk in your investments, and you're doing what's appropriate, what makes sense if we were to see a prolonged economic slowdown or a recession, something like that. Working with your CFP for your investments and overall financial picture, bracing for a recession, just in case this little little evidence spreads and becomes a bigger issue. For all of those things and a lot more, work with your CFP as you're doing comprehensive financial planning. How else can you apply this information? Work with your CFP on that. If you don't have a CFP, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.